Hello, in this video we're going to talk about the tribe's basis of accounting. And from the accounting manual we can see that the tribe has recognized that basis of accounting is referring to the timing of the recognition of revenues and expenditures. For example, expenditures are accounted for using the accrual basis of accounting, and our expenses are recognized when services are performed or goods are received. In addition to the expenses, revenues are recognized using the accrual basis of accounting, and these are recognized when earned. The accrual basis of accounting is recognized by generally accepted accounting principles, and in our accounting manual, the tribe has adopted and will conform to generally accepted accounting principles. Part of adopting the accrual basis of accounting is determining the period with which we'll recognize our revenue and expenses. For these instances, the tribe recognizes that its fiscal year begins October 1st and ends September 30th. While there may be other funds that operate outside of these years, for the purposes of audits and financial reporting, the tribe's fiscal year is October 1st to September 30th. Now, a key element in all of this, and from GAAP, is the matching principle. And that's part of the accrual basis of accounting that ensures that our expenses and revenues are matched and recognized in the proper accounting period, or the tribe's fiscal year. This can best be visualized using transactions that occur at the end of the fiscal year. And we'll take a look at a transaction in Intact to see just how that works. So here we're looking at a voucher prepared October 30th, 2023. Now looking at the front part of this, we can see that the invoice actually originates from August of 23, meaning the prior fiscal year. So when this was prepared, the general ledger posting date was changed to meet the tribe's fiscal year to ensure that its expenses incurred in the year in which it was recognized. The goods from this order were received in fiscal year 23. Even though the payment is now occurring in fiscal 24 and that cash would be exchanged inside of fiscal year 24, the expenses are recognized as happening in fiscal year 23, so we have this date here. So on approval, we can visit the posting details of the transaction, and from here we can see how the journal entry has been created based on the information from the Transactions tab of this voucher. It's posting to our accrual book. As we know from the accounting manual, the tribe uses the accrual basis of accounting. Inside of the accrual book, it's using the accounts payable journal. There is the journal entry number, the date the transaction is posting to, which we can see back from here. The general ledger posting date is 9/30. There is the expense account number that is being debited $3,000 for the purchase. The accounts payable account is being credited for the same amount. And this activity would be reflected that way within the financial report for the funding source. This also means that when we prepare the financial reports for the fund, for the program, and ultimately for the tribe, this expense being recognized as occurring in fiscal year 23 would be reported within those financial statements.